Hey tech enthusiasts, buckle up because you're tuned into the Tech Stocks Daily podcast, your go-to source for all the latest and greatest in the world of technology stocks. Today in the world of tech, Apple makes headlines, grasping attention with its varied strategies aimed at maintaining its colossal presence in the tech industry. Some might wonder what's brewing in the Apple orchard. Let's take a dive into the narrative. Starting off, Stephanie Link of Hightower Advisors casts a spotlight on Apple, spotlighting it as a shrewd investment in light of its recent discount prices. The stock, which has staggered about 13% from its zenith, is perched in what Link describes as the bargain bin, urging investors to lean in. Despite a 24% plummet in China's iPhone sales at the year's start, attributed to escalating competition and other factors, Link envisions an upswing, anticipating a better-than-expected April quarter, buoyed by the services sector's growth and robust margins, which should in essence rocket the earnings. Furthermore, with Apple's shares showing resilience amidst the Nasdaq's fluctuations and trading at a compelling valuation, Link has confidently bulked up her Apple stake, anticipating a new buyback announcement and a spotlight on AI at the upcoming Worldwide Developers Conference. Parallelly, Wamsi Mohan from BofA Securities gifts Apple a buy rating with a $225 price target, drawing attention to the company's pricing strategy and its impact over the last 17 years. The strategic pricing, entailing annual iPhone model introductions with a broadened price spectrum stretching from $429 to $1,599, has not only sustained but also scaled Apple's iPhone sales and market share. Despite a hiccup in unit sales, primarily attributed to China's sales slump, Apple has remarkably tightened its grip on the premium smartphone segment, owning over 90% market share in the $1,000 and above tier for 3 consecutive years. This dominance is further cemented by an increasing adoption of used iPhones, hinting at a sustainable upgrade cycle. With the services sector witnessing a hefty monetization, escalating the revenue per installed base device, Apple's enduring market strategy stands validated, promising buoyant revenue growth amidst adversities. Furthermore, in a comparative deep dive against its peers in the technology hardware, storage, and peripherals industry, Apple showcases a mixed bag of valuations and profitability metrics. Sporting a lower-than-average PE ratio, signifying potential growth at a reasonable price point, alongside a higher-than-average PB and PS ratio indicating a premium valuation, Apple's financial health narrative is intriguing. The company's profitability, underscored by superior ROE, EBITDA, and gross profit metrics, shines, albeit overshadowed by a concerning revenue growth rate, painting a complex picture of Apple's market dynamism. Moreover, in a strategic pivot, Apple has declared an imminent policy shift allowing developers within the European Union to directly distribute iOS apps from their websites. This move, aimed at aligning with EU directives, portrays Apple's adaptable stance in the face of regulatory pressures, potentially remodeling the app distribution landscape. Quite tellingly, Apple's orchestration across varied fronts, from investment appeals, strategic pricing, and industry positioning to policy shifts, highlights its multifaceted approach in sustaining and enlarging its empire in the ever-evolving tech arena. Today, Microsoft made headlines for a variety of intriguing reasons that paint a broad picture of the tech giant's current endeavors and strategies across several domains. Firstly, the video game industry spotlight is on Microsoft for its strategy regarding game exclusivity, particularly for games with budgets exceeding $200 million. Insights from industry veterans Sean Layden, former CEO of Sony Interactive Entertainment America, and former Xbox executive Peter Moore highlight a shift towards releasing games on multiple platforms to maximize reach and profitability. This discussion is especially relevant considering Microsoft's plans to release exclusives like Grounded and Sea of Thieves on rival platforms, indicating a strategic pivot meant to attract a wider audience. In another move showcasing their commitment to innovation, Microsoft has teamed up with Hexaware to launch Tensai GPT, an AI web application that leverages Microsoft Azure OpenAI service. This platform is designed to empower Hexaware employees with enterprise knowledge, fostering an environment of innovation and facilitating the transformation of ideas into tangible projects. It underscores Microsoft's broader ambitions in harnessing generative AI technologies to pave new paths in the tech landscape. However, not all news was about expansion and collaboration. Inside Microsoft, concerns are growing over the company's AI strategy, particularly its seemingly overdependence on its partnership with OpenAI. Critics argue that this reliance is shifting focus away from Microsoft's in-house AI initiatives, leading to a diminished internal innovation culture. The transition to supporting OpenAI's projects has even resulted in the departure of key personnel who were part of the in-house AI development efforts, reflecting internal discord over the strategic direction Microsoft is taking in the AI arena. Moreover, Microsoft is experiencing a significant moment in labor relations with around 600 Activision quality assurance workers under the Microsoft banner forming a union named Activision Quality Assurance United. This development is monumental not only because it represents the largest union within the video game sector in the US, but it also marks a pivotal move within a traditionally union-averse tech industry. The AQ aims to negotiate for better wages, benefits, and career paths, showcasing a push towards improving labor conditions in the tech world. Lastly, Microsoft's introduction of Copilot for Microsoft 365, a generative AI tool designed to boost productivity within the Microsoft 365 suite, stands as a testament to their focus on integrating AI into everyday work environments. By blending AI with user permissions and data, Copilot aspires to redefine workplace efficiency and operational effectiveness, underscoring Microsoft's drive to be at the forefront of workplace technological advancement. These developments reflect a multifaceted strategy by Microsoft, encompassing collaborations aiming at innovation, internal strategy shifts towards and around AI, significant moves in workplace organization, and endeavors to redefine productivity in the digital age. Google has taken a significant step to ensure the quality and reliability of information related to elections in India. Its Gemini artificial intelligence platform will no longer respond to queries directly associated with the Indian elections. This strategic move is part of Google's overarching mission to provide users with accessible, insightful, and relevant information, especially during critical times such as elections. Gemini's new policy deliberately avoids answering questions related to political candidates, parties, election outcomes, or specifics regarding office holders. Instead, it will direct users to perform searches on Google, which can offer more authoritative sources. This initiative, as Google stated in a blog post, emerged from a deep sense of responsibility towards furnishing high-quality information for election-related inquiries. To further this aim, the policy, initially rolled out in the US, has now been extended to India and will progressively be applied to other regions experiencing electoral processes within the year. Moreover, Google is collaborating with the Election Commission of India to make critical voting information seamlessly available on its search platform. This includes vital registration details and voting procedures, available both in English and Hindi, thereby broadening access to electoral participation. In tandem, Google is beefing up the fact-checking landscape in India by supporting an initiative titled Shakti. Shakti is an assembly of news publishers and fact-checkers focused on promptly identifying and mitigating the spread of online misinformation, including formidable challenges like deepfakes, by establishing a shared repository for publishers. To further ensure content authenticity and curb the spread of false information, Google has implemented tools and policies designed to disclose AI-generated content noticeably. These initiatives emphasize Google's unwavering commitment to maintaining the integrity and trustworthiness of election-related content, highlighting the tech giant's proactive role in paving the way for a more informed and truthful digital ecosystem around elections. Today, Snowflake Inc. is grabbing headlines, but not for reasons it would have hoped. The cloud data platform is now the defendant in a class action lawsuit for some eyebrow-raising practices during a certain period. Let's break it down juicy gossip style. Robbins Geller Rudman and Dowd LLP has rolled up its sleeves and announced that those who bought Snowflake Inc.'s Class A common stock between September 16, 2020 and March 2, 2022 have a deadline until April 29, 2024 to potentially lead a class action lawsuit against the company. But that's not all, folks. Another law firm, Braunstein, Gewirtz & Grossman LLC, also threw its hat into the ring, notifying investors of their chance to recover damages due to alleged violations of federal securities laws within the same time frame. So what's the tea? Well, the allegations read like a tech thriller. Snowflake is accused of overselling its capacity to customers, thus painting a rather rosy and misleading picture of demand for its services. If that wasn't enough, they apparently handed out significant discounts pre-IPO to boost sales temporarily. The plot thickens as allegations suggest these moves were unsustainable post-IPO, leading to a potential rollback of a substantial amount of unused credits at the end of contracts, or even customers refusing to renew their contracts. The climax came on March 2, 2022, when Snowflake revealed that its product revenue growth rate for fiscal 2023 was expected to plummet to a range of 65 to 67%, a steep drop from the triple-digit growth previously flaunted. The CFO blamed platform enhancements, which surprisingly lowered credit consumption, not exactly the plot twist investors hoped for. Following this revelation, Snowflake stock took a nosedive, nearly 28%, shaking investor confidence and prompting the lawsuits. In short, Snowflake finds itself in a frosty situation, as these lawsuits paint a chilling picture of misleading business practices that have left investors feeling cold. Whether Snowflake can weather this legal blizzard remains to be seen, but for now, the forecast is looking pretty stormy. All right, tech enthusiasts, Rumble has caught the spotlight today, and for some pretty intriguing reasons. First off, The big news is that Rumble Inc. has thrown its hat in the ring to potentially acquire TikTok. Yes, you heard that right. They've officially sent out an offer letter expressing their interest in becoming a cloud technology partner alongside a consortium of other parties aiming to operate TikTok within the United States. Now, here's where things get even more interesting. Alongside this bold move, Rumble has also unveiled the public launch of Rumble Cloud. It's a new infrastructure as a service offering aiming to champion a free and open internet. According to CEO Chris Pavlovsky, Rumble Cloud is all about securely storing data within the United States on their own neutral and independent infrastructure. The reaction? Well, traders are buzzing. Rumble stock was trending with predictions flying left and right on what this potential acquisition could mean for the video platform and cloud services company. To add a cherry on top, Rumble shares saw a significant upswing of 17.6%, peaking at $7.86. But there's a twist. While Rumble's aspirations to snag TikTok and broaden their portfolio are headline-worthy, we've got to remember the financial landscape. The possibility of a TikTok acquisition raises eyebrows, given the vast difference in valuation between TikTok's US operations and Rumble's market cap of about $2 billion, with just $267 million in cash and equivalents on hand. Despite these challenges, Rumble's venture into cloud services could be the real game changer, with potential to carve out a significant niche in the infrastructure as a service market, projected to hit $500 billion by 2030. Now, over to you, my insightful audience. What do you think about Rumble's ambitious moves? Is their bid for TikTok a strategic masterpiece or an overreach? And what about the launch of Rumble Cloud? Drop your thoughts, forecasts, and reactions in the comments below. This is one tech saga we'll all be watching closely. Today's tech market sentiment is buzzing with a mix of skepticism, ambition, and innovation, with significant developments from big players like Apple, Microsoft, Google, Snowflake Inc., and Rumble. Apple is gaining attention with its bargain stock prices and a positive outlook towards its upcoming quarter, fueled by growth in the services sector and robust margins despite a plunge in China's iPhone sales. The company is also adapting to regulatory pressures in the European Union by altering its app distribution policy, reflecting a strategic shift to maintain its dominance. In the gaming and AI spheres, Microsoft is pivoting towards inclusivity by planning to release high-budget games on multiple platforms. It's also leveraging its partnership with OpenAI to drive innovation, despite internal concerns over the heavy reliance on this partnership at the cost of in-house initiatives. Additionally, Microsoft's initiation of a generative AI tool, Copilot, signifies a forward move in integrating AI into workplace productivity, reflecting a modern approach to tech advancement. Google is stepping up its game in election integrity in India by preventing its Gemini AI from answering direct election-related queries and collaborating with the Election Commission of India to provide critical voting information. This move underlines Google's commitment to providing reliable information during sensitive times, showcasing a responsible stance in the tech ecosystem. Snowflake Inc. is facing a class action lawsuit alleging misleading practices regarding the demand for its services and unsustainable sales tactics. The lawsuit follows a significant drop in the expected product revenue growth rate, undermining investor confidence. Lastly, Rumble has announced its interest in acquiring TikTok and launching Rumble Cloud, aiming to secure a stake in the cloud services market while promoting a free and open internet. Despite the financial hurdles, this bold move has caused a notable upswing in Rumble's stock, reflecting market optimism towards their ambitious growth strategies. Overall, today's market sentiment is a vibrant tableau of strategic pivots, legal challenges, and bold ventures into new territories, highlighting the dynamic nature of the tech industry. All right, tuning right into the Apple stock based on today's tech roundup. Given the news and insights from today, if I were to pick between buy, sell, or hold for Apple, I'd lean towards a solid buy. Now let me walk you through the orchard of reasoning behind this juicy decision. First off, Apple is making headlines for a slew of strategic moves and financial health indicators that paint a rather optimistic picture. The stock, currently perceived to be in the bargain bin after a 13% tumble from its peak, is spotlighted by Stephanie Link of Hightower Advisors as a smart buy. She anticipates an upturn buoyed by expected robust growth in the services sector and strong margins, which is poised to propel earnings. This outlook, combined with Apple's resilience amidst Nasdaq's fluctuations, offers a compelling argument for considering it undervalued at its current valuation. Furthermore, the stock's valuation metrics and profitability indicators present a mixed, albeit favorable scenario. Sporting a lower than average PE ratio, it signifies that Apple is potentially trading at a growth at a reasonable price point. While some of its ratios suggest a premium valuation, the company's profitability metrics, including superior ROE, EBITDA, and gross profit figures, underscore a strong financial health narrative. Additionally, Apple's enduring market strategy and its dominant position in the premium smartphone segment holding over 90% market share in the $1,000 and above tier for 3 consecutive years, highlights its sustained market strength and potential for revenue growth despite adversities. Moreover, Apple's readiness to adapt to regulatory changes, notably its policy shift in app distribution within the EU, reflects its agility and ability to maintain dominance. This adaptability underlines a strategic foresight that is crucial for long-term sustainability and growth. In the fast-evolving tech landscape, Apple's multifaceted strategy across investment appeal, industry positioning, and policy adaptation speaks volumes about its robustness and growth prospects. Now, always remember, as buzzing and appealing as any stock might sound based on daily news, it's crucial to do your own deep dive, gather your apples of information, and make informed decisions that align with your investment goals and risk tolerance. So while Apple stock looks like a buy from today's perspective, ensure to peel back the layers and evaluate it within the context of your own research and financial strategy. Wrapping up today's market activity, we've journeyed through a landscape marked by Apple's strategic prowess, Microsoft's innovation and internal challenges, Google's commitment to election integrity in India, and Snowflake Inc's legal battles, with Rumble making bold moves aiming to reshape the cloud services market. It was a day charged with strategic shifts, legal dramas, and ambitious expansions, painting a vivid picture of the ever-evolving and dynamic tech industry. If today's tech market roundup has piqued your interest or provided you with valuable insights, don't forget to hit that like button, subscribe to our channel for your daily dose of tech market news, and share this video with others who might find it intriguing. We love seeing our tech community grow and thrive with informed decisions and spirited discussions. Remember, the tech world never sleeps, and neither does our curiosity to explore its depths. So, join us again tomorrow for another video, where we'll decode the market's signals, dive into the latest tech trends, and uncover the stories shaping the future of technology. Stay tuned, and let's keep navigating this digital revolution together.